day. Today we are going to talk about a gap principle which is called the historic cost principle. Now, what is this principle talking about? So let's say, for example, before we go there, let's say, for example, a business buys a car, right? This is on year 2018. We buy a car for 200,000, right? So now, let's say we still have the same car in year 2020. So this is year 2020. So we still have the same car. So now we still have the same car, right? So what is the historic cost principle saying? We know that if this vehicle was bought on the year 2018, obviously by the year 2020, it will no longer have this value of 200,000. Obviously, the value has decreased. But the historic cost concept, it is saying that assets should be recorded at their original cost price or at their value in which they were bought with. Meaning that if they were bought for 200,000, they should always be recorded at that price. That is what it's saying. Meaning that we should always record this vehicle with the same price. We know that it has lost its value, but it must always be recorded in the original cost price. That is what the historic cost concept is saying. It is saying that assets should be recorded at their original cost price. So same thing with the building. Let's say we bought a building. So we bought a building. This is a building. We bought it in year 2018. Let's say for 500,000. So we know that the building or the property, its value it increases, unlike the vehicle, because the vehicle its value decreases. But for the property, the value increases. So we may expect that maybe by year 2020, it is now maybe around 750,000. Its value it has increased, but because of the historical concept, it is saying that they should always be recorded at their original cost price, even if the asset is value has increased. But they should always be recorded at their original cost price in which they were bought with. Okay, that is what it states.